Joining us now to discuss, well, that effort, the markets, credit, and a lot more is Gregg Lemkau. He's co-CEO of BDT and MSD Partners. You need to change the name. Figure that out.
It's on the to-do list.
All right, so you've been out of Goldman for a couple of years, but I'm curious, what are you doing now that is similar and or different from what you did for many years, of course, as a banker and then as a senior executive at Goldman Sachs?
Yeah, if you look what we're trying to do at BDT and MSD, and I think Michael captured the enthusiasm well for what we're trying to do. We took an investment firm, probably the leading investment firm that came out of a family office that was looking to deploy capital over long periods of time with kind of deep investment expertise, and combined it with BDT Partners, which Byron Trott had founded, as you said, which is really trying to be a merchant bank for closely held businesses, for families and founders. And as we put the businesses together, it's really unique. We're trying to serve the needs of family business owners and founders really across three things. One is advisory, and it's advisory writ large. It's strategic advisory, so very similar to the things I did at Goldman. Capital raising, trust and estate advisory, succession planning, family dispute mediation, philanthropy, anything a family business owner could want. So that's one part of our business. The second part is capital partners. So often when these family businesses, at some point during their life cycle, they'll need a capital partner. We have capital from long duration focused families. And so if you want a long dated partner to invest alongside you in your business, we're a great capital source. And then the third, especially with the combination, is now investment solutions. If you think about these families and founders wanting to diversify away from their core business, they can invest, just like we can invest alongside them in their companies, they can invest alongside us in our funds across private capital, credit, real estate, and soon to be growth equity. So it's really a holistic set of solutions for family and founder-led businesses.
Now, obviously, you were often in the public markets. We cover those public markets very closely here. I feel sometimes, though, Greg, and I'd love to get your sense of this, the growth in the private markets has been so enormous over these last, 5, 10 years. Give our viewers a sense as to how things have changed and how big a player firms like yours is now in private credit and things of that nature.
So I think there's been a lot of focus on private equity, which has grown meaningfully, and lots of big companies have come out of the public markets and been able to be owned privately and take a longer duration in terms of their business, not worry about quarter to quarter. We've seen that trend for a long time. I think what hasn't been appreciated is the size and scale of the private credit market, which is multiples and multiples of the private equity market. And that's actually where we see meaningful opportunity today. As the banks have left the field in a lot of this private direct lending, there's actually an opportunity as a lender to be dictating terms, probably for the first time in almost 20 years. And so it's quite an attractive time to be in private credit.
Are the banks ever coming back to this market, though? I mean, I know they would claim, well, we're still there, but obviously they're not there in the way that they had been. Is there an expectation, though, they haven't given up the fight?
I think the balance with the banks is trying to manage all the regulatory constraints that they've got, and there's a lot of constraints in that. And in the private credit markets, you've got a lot more ability to lend directly to these companies. And so I think the banks have not gone away, and there's big elements of the market, especially the liquid elements of the market, where the banks will continue to be active. But in the private direct lending market, you've really seen the private lenders come in and fill that space.
Yeah, but everybody's in private credit now. I mean, family offices like yours. We talked to TCW yesterday. Blackstone said it's a golden era for private credit. Can everyone get double-digit returns by lending?
So it's a private credit. Everyone is talking about it. The beauty of our business, we've had at MSD, we've had a private credit business for 20 plus years. We've actually had the same team in place for 17 years. Michael Dell has called it for a long time his stay rich business. This is where you kind of put your money away and it just compounds.
Pretty unique, right? Most of them are post-financial crisis.
Most of them are. I think actually Katie Koch had a quote about 96% of them being started post-financial crisis. So it's helpful to have a team with expertise. I think as we look at private credit right now, if you want to do it's really the direct lending market in the loan market right now, the primary loan market. You want a handful of things if you're making a loan. You want to have a recession-resilient business right now. You want to have low loan-to-value, so there can be a meaningful deterioration in the value of the business and you're not impaired. You want to have good documentation so money can't leak out of the system. You want to have double-digit yield, and you want to have upsides. You want to buy into the discount. I'd say for the past 20 years, you had to pick 2 of those 5 things. I think right now, you can pick all 5. So the private credit market in the primary loan market is great. I would say if you looked at the secondary market, the values look really good, but the documentation of the past 5 years is really weak. And I'm not sure I want to be buying stuff where money can leak out of the system. So we're staying away from the secondary market. And even in the high yield market right now, I don't think you're getting paid for the risk in the high yield market. And there's still these adjustments to EBITDA that I'm not sure are real. And so the leverage ratios.